The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Slow and easy still. Not enough energy to do the normal opening, but welcome to the December 19th Trader's Edge Show. I'm your host, Steve Rhodes. Thanks so much for being here. Just recovering from some kind of nasty virus. I mean, it's nasty. But in any event, we're here. We're ready to do the full hour, and I'd love to hear from you. You can always give us a call at 877-927-6648. And if you can't dial in, you can always send me an email, steve@tfnn.com. In the subject heading, it's really helpful if you just put radio show question, something so that I can differentiate your email from what basically is most of the junk that each of us get through our email system out there. That's really that's the next great thing. Somehow an email system where it just gets rid of our junk and just knows who it is that is important to us. And I've got so many rules inside my email system, and still doesn't matter. But we're not here to talk about email. Of course, in the Tiger's Den, you can send me an instant message, ping or otherwise. So let's go ahead and get this show started on today is what, Wonderful Wednesday. Of course, this is Tiger Financial News Network, and this is December the 19th. This is Fed Day. So the next hour, maybe it doesn't mean anything. It may not mean a thing if it ain't got that swing. And so that swing is going to take place during the Polar Bear show between 2 and 3 o'clock. And then I presume maybe by about 3:30 or so, after the market's been able to digest whatever it is that Jerome Powell has to say, we'll know what the true intention of the market is, maybe from here until or towards the end of the year. But if we go take a look at clues right now, then by clues right now, we have the Dow up 220. That's 1%. S&P about 0.8%. That's up 21. NASDAQ up 35. Russell's up 10. Semis are off 9. Transport's down 9. NASDAQ Composites up. New York Stock Exchange is up. Wilshire is up out there. Spot Volatility Index is off minus 7%. So you'll want to watch that today. If it closes with a one-day rate of change below minus 10%, then what you would have in VIX folklore, it's more than just folklore out there, is you would have what would be considered to be an initiation day. So let's say the markets take off to the upside. We'll take a look at both sides out here, by the way. If the markets take if the markets take off to the upside, what you would want to look at is, well, what's the spot volatility index one-day rate of change? Again, you'll be looking for anything south of negative 10% out there. Right now we're at minus 7%, and really the numbers that you and I are going to take a look at right now, to a certain extent, don't really matter. It's all going to be about, is there a reaction? And if so, what's that reaction? What does it look like? Gold is up $3. Silver's up 12 pennies. But the miners are pulling back out here. Does one party know what the other, did everybody get the memo? Apparently not out there. Apple's up 27 cents. Not a big deal. We talked about Apple. And on a weekly basis, by Friday, this thing could be forming. By the way, here, I'll put the chart out there. This could be forming at the end of this week, a time to mark setup 9 count. So that'll be interesting as long as it closes below this is the weekly chart. So we've got this is 9. But of course, remember on a 9 count, from a time to mark standpoint, the time to mark setup standpoint, in this case here, because price is moving lower, that low could take place either on the exact 9, that would be this week, the bar earlier or the bar later. So you could see a lower low next week, and this pattern would still exist out here. So that's really something you and I will have to take a look at next week. Just remind me if I don't remind myself, and we'll certainly take a look at that. But if we're looking for clues as to what the market is trying to communicate to you and I at 1:10 in the afternoon, all we have to really do is go take a look at the NQ daily chart out here. Now, you might say why, and I'm going to tell you why. And the reason is because if we look at what's going on inside the NQ, We've got several different patterns out here, and I do mean several different patterns. Hopefully, you're watching us on TigerTV, and what you can see out here, first, if we utilize a portion of the Chapman wave, just simply count the waves from 1 through 7, so A through G, from the highest high out there. It's not using a system. You need to understand a system, which is a great system if you want to go ahead and trade utilizing the Chapman wave. All I'm doing is just utilizing the magical components, the musical components, taking a look at a market that could sing in the key of G, wave number 7. Oftentimes when you get to that wave, it's different than Basil's rogue wave system out there. Oftentimes, though, when you get to that, that's where you can see a change in trend. Well, 2 days ago is when, from its highs out here, the high, by the way, I'll give you the date. This was the high from October the 1st, all the way down to the low out here on December the 17th. That took us, we didn't know that December 17th was going to be that singing in the key of G, wave number 7. We didn't know that until yesterday. But yesterday we had a higher low. So therefore, you've got that as a potential bottoming signal. You have a 3 drive to a bottom. I'm sure if Larry was on this morning, yeah, he had to have shown you this because this one is pretty close to textbook. It's not exact, but it's pretty darn close. Good enough for 3 drives to a bottom. So you've got that going on out there. You've got price moving lower, doing with less relative energy, the Rhodes momentum indicator signal. So there are 3 well-established potential bottoming signals out here. Now, during the day, because of yesterday's action actually out here, because of that sell-off going into the contract close yesterday, that was actually a bullish close. Now, you might say why it gave up all of its gains. The reason was because what it did was it created a small-bodied candle, a small-bodied down candle. And therefore, in doing that, it gave the opportunity today for the actual cavalry to arrive, to create that bullish reversal signal. Now, as we take a look at the charts right now at 112, we're looking for bullish signals. It's there. Of course, with the small-bodied candle yesterday, it really didn't take much in order to get that bullish engulfing candle. However, there is a fly in the financial ointment. And that fly is that what price did this morning, what price was able to bounce up to, was Stevie's red line. You're looking at it on your chart or my chart or your screen right now, and you're going to see at that 65.95 level. And look, we're not worried about getting right to the tick out here or pip or to the point, but you can see how that acted as resistance. So the way that you will know that the Santa has arrived, all you have to do is pay attention to the NQ. Now, when I say NQ, I'm talking about the NASDAQ futures, the NASDAQ 100 futures contract. Don't punch in NQ. You might get a symbol. So there might be some stock symbol. NQ will come up and you'll say, where the heck did you come up with 65.95, Steve-O? So if you're looking, if you're taking a look at the March contract for the NQ, that's the number. Look, you got plenty of apps. You get plenty of ways to find out that information. But here's the deal. If you see it close above Stevie's red line, it's acted as resistance. That's what it's tested. So we know that the sellers are still lurking out there. Why? Because this is the line that shows you where the buyers and the sellers are. There's a close above it. Then what you should see is a move up towards its descending trend line. Now, this is a descending trend line just starting out here, looking back at October 17th, looking at November the 8th. Just use those 2 touch points. In essence, the rally, if there is one, should find real resistance around 70.40. Of course, if it moves to the downside, we can go take a look at that action as well. The message is uncertain as to which way it wants to go at about 2:30. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So what do we want to take a look at here next? We can go take a look at the other equity feud. Now, I know what we want to take a look at next. By the way, if we just put up the TAS market profiles here on a daily basis, you'll see that there's where price hit resistance this morning. If you were just looking at the daily time frame, quite frankly, even the intraday time frame out here, they're 5-hour chart, maybe there was a price got up to a resistance zone, but nothing as good or as Stevie's red line, which, by the way, if you're interested in learning that, just sign up for Mastering Probability. There's 5 or 6 workshops. That's 5 or 6 hours at least worth of training, and one of those is how you can go ahead and engage for yourself or put a program for yourself, that tool on your chart out there. So it's an excellent tool for whatever time frame it is that you decide to trade. So we take a look at these market profiles out here. On the daily basis, we're trading below all the bottom. So there's no signal information coming here. Of course, this, for the most part, is going to be a lagging indicator. Not always, but for the most part, that's why I said for the most part, a lagging indicator out here. Perhaps where it's not lagging, though, and what's really important, both to the downside and to the upside, is the longer-term picture for the equity futures contracts. Take a look at the NQ, the Dow, YM, and the S&P, the ES Mini. Now, I'm going to focus first here on the NQ, because the NQ itself, from a daily perspective, has generated the largest number of bottoming signals, right? We took a look at wave number 7. Whoops. We took a look at wave number 7. We took a look at a 3 drive to a bottom. We took a look at the Rhodes momentum indicator. There's probably an A to B equals CD pattern in there as well. Now when we come and focus on the monthly chart, and the month doesn't end today. The month doesn't end until when? Today's only the 19th. So not until the 31st. So on New Year's Eve, the market closes at 1 o'clock. This is going to be really important. What's going to be really important? The bottom of its profile. So here, let me just turn price off for you. This way you'll see the exact number. Or I can at least if we take a look at this profile here, this is a profile, by the way, that formed in November. And you can see that it was a bearish structured profile. Now, again, what a bearish structured profile means is that within inside this profile tells us where support and resistance is. Pretty easy. Support's going to be the bottom of the box. In this case here, 65.20. That's what you'd write down on your pad of paper. Resistance, 77.51, 77.52 out there. There's your resistance. So it tells us where buyers and sellers are. What it also does is it tells us where the congregation is at. And the congregation here is at 73.41. What does that mean? Well, that means that both buyers and sellers believe within inside this entire range, that is the price point where they are most comfortable, either selling or buying, believe it or not. It's where it's like driving down it's like you having a specific route that you take to go someplace. And along that route, maybe it's your morning route and your evening route, you know where there's going to be traffic. This basically is our traffic. And when the traffic is closer to the top, what it does is it tells us that the structure of this box is bearish. There's more sellers, in essence, lined up between 73.41 and 77.51. And it also means that what these sellers ought to have been able to have done, which they have, is be able to push price all the way down to the bottom of that profile, support. So now when we turn price back on, we can see that we are trading just above that level. We're trading at 65.52. The bottom of that profile is 65.20. So it's been tested. It's been pierced. It's really all about the body of the candle. It's not about the wick or the upper or lower shadow out there. That is basically the temper tantrum area of a candle session. Very much like what's going on in the news media about interest rates out there. This reminds me of when I see what goes on Bloomberg TV, CNBC, all of the people, the charade that they put back and forth out there with regard, you can see I'm starting to get some energy here, with regard to interest rates and how that's going to crater the markets. This is like a group of screaming memes. What does that mean? It reminds me, you've seen it, because I know it doesn't apply to you and your family, but you've seen other children out there that are just whiners, that will just whine until they get what they want out there. These people on the boob tube out there clearly do not look at charts. They don't look at history. They don't look back to say rising interest rates is a good thing. And I wish that Powell would come out and just simply tell the folks what's really going on. Tell the folks that raising interest rates is good for the middle class, for everybody out there. Because that's the God honest truth. When you take a look at your Social Security funds and everybody else's Social Security funds that move into, do you realize that those monies, they're coming right out of your payroll? If you're the employer, you're writing the other half of that check. If you're not the employer, you got the employer that's also contributing in there. And where is that money going? Is it being invested in the stock market? Like if you had a 401k, like if there was going to go, you'd have 40% in this and 20% in this and 30. Did you ever ask yourself? Well, the answer is no. Did you ever ask yourself why? Why isn't it? Why is it that professional money managers will go ahead and take an individual's portfolio, their retirement accounts, and go ahead and have some type of distribution of investments, whether it's foreign equities, local-based equities, meaning your country, in this case here the U.S., some bond exposure, some some commodity exposure. Well, why is it that we allow our government to just simply collect that money and then go ahead and borrow it, to go ahead and give an IOU, because that's what it is. They just simply take that money, give an IOU that says we're going to pay you back, and it's based upon the current interest rate structure out here. So the real harm has been interest rates being so low. It's harming all. And politicians, what a joke. Nearly all of them. Okay, if you're a politician, not you specifically, but nearly all of them or most of them out there. Because when it comes to election time, which seems to be like all the time now out here, they're going to tell you that they've got the lower middle class interest best interest at heart. BS. That is just junk out there. How often do you hear somebody saying it's just the wealthy that have been able to benefit from the bottom in March of 2009? Why isn't somebody asking the question, well, why is that? I contributed to a retirement account. Why aren't they asking that? What are you guys doing with my Social Security funds that you say are going to run out? Why? Yeah. Anyways, I'm getting off track here. What's really important, though, is and so we're not going to hear the real story, and I get sick of these temper tantrums. But that's really the upper and lower shadow of the candle out there, and so we don't pay as much attention to that as we do the body of the candle. And so where that closes at the end of the month on December 31st will be really important. Will support have held? Is the NQ just simply in its own consolidation? And by consolidation here, we're talking about being in between the top of the box and the bottom of the box. So you now have those numbers. We haven't seen it close below a bottom of a box since the move up from 2009. So I think it closed below that would be mighty important. It's Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we got the Dow, the S&P's up 0.8%, up 21 points, trading at 2567. We're going to go talk with John in Philadelphia about the S&P. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Say, Steve, thanks for taking the call.
My pleasure.
And just a comment about all those appropriate questions you just asked. It's clear to me you in the role of Neo took the red pill that Morpheus offered. So you're asking all the right questions, and unfortunately, there aren't any good answers for those questions.
Yes. So
anyway,
true,
2 questions,
very true.
Please. A very specific one for you on the S&P 500 cash, and then a follow-up on the natural gas. On the S&P, you have documented all through this year how, at least through this point in time, the pattern off that January 26th top is potentially just a large, long consolidation.
Sure.
Question, however, now that the lows this week, Monday and Tuesday, tested 2530 on the S&P cash, that February 9th low, if price falls under and remains under that for some period of time, 2-3 consecutive days, is that a signal that we've got massive overhead supply in a true bear market just emerging?
The way that I would have to answer that question is, well, first, what I would be looking at is, does price move to 2477, and what happens at that point in time? And how does it do that? And so, folks, what I'm looking at here, just with regard to the S&P 500, and trying to answer John's question, is there is an incomplete pattern that is present at the moment. Here's what we know about the S&P 500. As John pointed out, the session from February 9th, which had massive volume, has been tested twice over the, not today, but yesterday and the day before, with about 40-50% of the volume there. So what this tells us is that right now the S&P is unable to bust them to the downside. So price should move higher. We'll see how that actually plays out perhaps today. If it does or it doesn't, there's still A to B equals CD pattern that is in play out here as long as price remains below the swing point, the B point of October 29th out here. So, John, I think as long as price stays below 2603, I think is the number, the S&P is nowhere near out of the woods. But maybe it's just an A to B equals CD to the downside at 2477. For me, the bigger message to answer your question comes more from the Dow than it does, because typically in a consolidation, your typical consolidation, and the Dow is one that really shows it the best, you've got, a very clear, what we'll call double top out there. And so in this case, I'm just simply going to put the monthly chart up on the screen. And you've got, in essence, a double bottom, where you have those lows being tested. So here's the monthly time frame chart for the Dow. We can see the January high, 26,616. We can see how it was tested in September as well as October. Couldn't bust them up. What is it doing? Busting it to the downside. Now we've seen that bust to the downside in essence. In the case of the Dow this week, it hasn't tested that low exactly, but it's close enough for our game, 23,360 out here. If at the end of this month, we see a close below 23,360, then we have something where, okay, then I say, yeah, bear market is on until price closes back above 23,360. Because as you know, one of the easiest patterns that we've ever learned in the consolidation is the measured move price projection. When you break through a consolidation, you have a measured move price projection. In the case of the Dow, it takes you to about 20,100. I believe if we take a look at the move off of 26,000 down to about 20,000, which is a possibility, that qualifies as certainly bear market territory out there. With regard back to the S&P for you, and just to try to answer that question for you as best I can, I would say the key level to be looking at inside the S&P is going to be, this is the Dow I've got up. Let me put up the S&P. SPX. It's going to be the close on December 31st, 2017. 1 year ago today. Well, not today, but 1 year ago in a couple of weeks. And that price point is going to be 2673.61. If the S&P does not close above that come December 31st at 1 o'clock in the afternoon, then I think this market does have more downside action. Whether it's going to bust through 2532 or not, I don't know. But if it closes above that, then we might have something else to take a look at. So I guess that's my theory when I take a look at the S&P 500. Does that help at all?
Yeah, Steve, thanks so much. That answers my very specific question. And what sticks out for me and what you just had to say was the potential of a measured move projection lower if, certain price parameters are met. So thanks on that.
Sure.
One last question, please. On the natural gas, I'm wondering if you can pull up the February contract. That will become the lead natural gas contract by like the 25th, 29th.
Okay.
You and I both know that these winter contracts in nat gas are highly dependent, if not exclusively dependent, upon how cold winter is versus average. With that said, is there anything that you can see in your technical work that would suggest the low that occurred earlier this week down at 343 on that FedNat gas is from a technical perspective a logical spot for a low to become an important bottom?
There is. So it's a great question. It's similar to when we were taking a look at the monthly chart for the NQ and its TAS market profiles, and price was trading inside that box, which had a bearish structure. In the case of the February contract for the NQ, we can see that price had been trading above the top of its weekly profile that formed back at the beginning of December. And what price has done is price has now come back and it has tested the top of that profile. So that says what could have been old resistance is, in essence, new support. And that price level, John, is 3.459. That was tested. It is held. I would say if price closes above that level this week, then the only interpretation is that that was a key level of resistance, let alone prices come back to where, in essence, it broke out, which was during the week of November 5th. Yes, it hasn't made it down to those lows, and always a possibility, and that's at 3.285 out here. That would be the other buy point. Unless natural gas closes below that, this still remains bullish. And as far as cold, I think in the world we're off to a pretty good start for winter. So if it's dependent upon the weather, well, then you're certainly in the right place. And then earlier this week,
I'm very pleased to see this, Steve. I did not realize you have become a weather expert, but say hallelujah.
You bet. Hey, John, always good to hear your voice.
Thanks so much for your time.
Thanks for calling. You bet. Merry Christmas to you.
Bye.
This is Steve Rhodes with TFNN. We'll be right back, folks.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So not really much new here in the market with regard to what the market's expecting or how it's going to react with regard to the Fed. Looks like we got another call to talk about the S&P, and this is John in Miami. John, thanks for calling. Thanks for holding. How are you doing down there?
Good, man. How are you?
I'm doing very well, thanks. How can I help you?
Earlier you were talking about that it looked like there were many factors that looked like we hadn't made some type of a short-term bottom.
It's possible.
Right into your red line resistance. What number is that on the S&P or the S&P futures?
Sure. So for the S&P futures, it didn't come close to hitting that level. That, by the way, is 2603 inside the ES mini, the March contract. If I give you that number here for the S&P cash, it's 2600 or 2601. So that's why, John, I think the NQ is the area to be watching, because if the reaction by the end of the trading session is a close above that level, we may not see that a close above that level inside the ES, the S&P, or the Dow, and the YM out there as an example. But it's really the NQ that had this. The markets have had a nice bounce. But I can say unequivocally that all they've really done is bounce up to a clear level of resistance that you and I look at each day when we do this show. Right. So I'd really be focused. So you have the numbers for the ES. And the S&P, but I wouldn't be necessarily making a judgment on is this the beginning of some type of Santa Claus rally up to resistance, which may not last through the end of the year, by the way, because we'd have to see what happens at resistance, or is all holy heck going to break loose, and we're going to see a big flush inside the S&P 500 at least to go ahead and complete the A to B equals CD to the downside. And that is a possibility. Is the Dow going to go ahead and bust through its consolidation level? And in the case of the Dow, for me, John, it would really be all about the monthly close versus what happens over the course of the next several days. So what we know about the S&P 500 specifically is yesterday, as an example, it was tested with very light volume, it being the February 9th low. For the SPYs, the volume was 134 million versus 283. That's less than 50% of the volume. And the day before that was 165 versus 283. So, you know, we'll see if the volume metric here and then the patterns in the NQ are what are signaling to you and I that, okay, we're going to see another rally unfold. Not that it is the ultimate of bottoms. It could be. Okay, I wish I could be more definitive, but at least it would signal that there's going to be some rally, and then we have to just watch resistance overhead to see what happens along the way. So that's the upside. The downside is it just simply busts through the February low. But in the case of the S&P 500, the question is, does it move below 2477?
Oh, okay. And this red line or this red line you have, is that included with your subscription, or do you have an indicator for that?
It's it's an indicator that I developed. I give away the exact formula on the in the workshop that I done that you'd get access to if you become a subscriber. You have 30-day risk-free trial, so there's really nothing out of pocket there to worry about. And if you are a user of the Thinkorswim platform, then if you subscribe to the newsletter and then you send me an email, what I will do is I will send you the formula so you can apply that tool on your Thinkorswim platform.
Okay, cool. And Steve, how do you use that tool? Like, what's that? Like what's your thought behind that tool? So, like, when I do subscribe, I know how to use it properly.
The workshop, the 1 hour workshop, will tell you exactly the
cool.
exactly.
And I subscribe, correct?
You do. That's a workshop that amongst another 5 that are on your members page, in your members page area. So it'll go through exactly what you need to do, and then after that, if you've got questions, you'll give me a call, and then you'll be able to go ahead and apply that tool on your Thinkorswim application. Take a look at what you would have traded, how that would have assisted you along the way in some decision making out there.
All right, cool, man. Thanks.
All right.
Hey, if I'll talk to you before that, best wishes for Christmas and a Happy New Year.
Thanks. My pleasure. Same to you and your family. And thanks for calling and listening. That was we got this is the day of John. I like it. Of course, John, you in Miami, you're much warmer than John in Philadelphia right now.
Oh yeah.
So
it's too hot here, man.
Yeah. All right. Thanks so much for calling.
It doesn't feel like Christmas.
Yeah, you bet. You bet. All right, folks, so we've got about 3 minutes left in this section. Why don't we take a look at, so you've got gold to the upside and you have the miners pulling back. Why don't we see what they're actually doing out here? And when I say the miners, I'm just referring to the GDX itself. So in the case of the GDX, it completed today, this morning, its 1-to-1 A to B equals CD price projection. It did it almost right to the T. If we take a look at what that T would have looked like, we would have started with the A point down here. This was on September 11th. That was your A point. Your B point was out here on the trading day of October 23rd. Makes it what looks like a natural retracement, about a 68% retracement. Was actually 69.55. We use these as guidelines, and that would have given a price projection of 21.49. The interesting thing is in the GDX, it didn't complete or confirm that move until yesterday because that B point was passed with volume yesterday. Yesterday was 79 million shares, taking out 51 million shares. So it completed the 1-to-1. And since then, it has backed off. What does that mean? Well, specifically with regard to the GDX, let's turn off the A to B equals CD pattern. Much like we were looking at with John at natural gas, looking at the February contract, it's still bullish. It's still bullish because price is at least above the top of the box. So the question would be, where is support for GDX? Support is going to be one of 3 levels. Well, we'll give you 2 levels. That'd be the easiest. 2082, that's the top of the profile. If price closes inside this profile, which is pretty equally distributed, that means the center line is pretty much dead in the center. So neither bulls nor bears have any kind of extra energy, if you will, inside this profile. The bottom is 1992. That would be support. That would be at least where price could pull back to. If we were to go ahead and put the GDX on Stevie's other system out here and take a look at where's that red line, like John and I were talking about. Let's see if this will populate for us quickly. That is not a red line, it's a green line. And here it says 2037. It says as long as price stays above 2037, there's no problem. If price gets below 2037, well, then what you're looking at, and here you had 2055 at the top, then you're probably looking at a pullback or retracement to 1992. Now, it's made a higher high today, but the volume is light. 27 million shares so far. Remember, yesterday was 80 million shares. We're already, what, 4 hours into the trading session? 9, 10, 11, yeah. So it's going to have some lighter volume. I don't see any other resistance out here. Oftentimes when you do a 1-to-1 A to B equals CD, doesn't mean it's over. Can be. It depends what candle forms today. Right now, if the close of today is halfway into the body of yesterday, which is pretty much where it's trading at right now at 2080, it'd be considered a dark cloud cover candle. But there's not really problems in River City until price were to close below support, 2037, or the top of the box, which is up at the 2055 level out here. So the GDX, to sum it up, completed a 1-to-1 A to B equals CD pattern. That's all we really know at this stage here. It doesn't mean the move is necessarily over, but we'll have a better feel at 4:01 today. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So as you're saying in the den, about 6 minutes to go before you find out what the Fed is going to do with interest rates. Of course, that is perhaps not as important as to the statement. So that may be about 2:30 or so. So you're going to see an initial reaction, then maybe a secondary reaction, and you're going to want to really see, I think, what's the reaction between 3 and 4 o'clock. The losses hold, the gains hold. What is it? So to the downside, what you're looking at. We talked about the S&P a bunch. Let's just summarize that. There's a unfinished if prices behave badly. If the sellers continue to come out of the woodwork, watch for the S&P 500 to get down to about 2477. So it'll bust through the February lows, or could bust through the lows of February, and then it completes a 1-to-1 A to B equals CD pattern. It could form a bottom at that stage, right around there. Likewise, maybe we don't see that at all. And then what you'd be watching for, we talked about into the S&P 500, does price get over Stevie's red line? That red line number, again, I don't have that handy. Shoot. And I'm not going to do that here in the next minute. On the ES Mini, let me just give it to you there. Watch for the 2603 level. I think the key, two keys we started with at the show, just simply come back to those. For the real signal comes from the NQ. 65.97 is the number. You close above that, price should make its way up to 67.83 before it provides you with the next piece of information. And above that, you're looking at about 70.40. To the downside, we didn't really look at the downside action inside the NQ. So at this stage here, what would that be? Good question. If we take a look at the NQ, come on, punch up on my screen. What's the deal here? Here, I would be looking at, it's a tough one, because, you know, which A to B equals CD. Let's skip over that. Let's go right to the spot volatility index. Watch that as well at the end of the day. On the bullish side, if there is a bullish scenario that plays out here, what you're going to look for is a one-day rate of change less than minus 10%. Those are the green arrows on my screen. And typically, what they do is they are an initiation signal to higher prices. That should help you bears out as well, so that you know to stay out of the way until the next real significant top forms inside the markets. Folks, thanks so much for being here. Stay tuned. David White, your favorite polar bear, he'll take over from here. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.